If you treat the 4-hour or 60-minute as your daily chart and study 5-minute structure, a whole new world opens up to you. Test it and see. There are two main things that ICT students miss out on, and they're the most important things when trying to become more precise using ICT concepts. I'm going to uncover what those two things are in this video. When you look at this tweet, there are two important things in here, and that is that you need a higher time frame bias. You need to know where price is going, and once you do that, you look on the lower time frame for setup. So if you're just going onto a lower time frame chart, looking for a bullish market structure shift after price takes out liquidity with a fair value gap, with no idea of where price is already going, then this is a 50-50 trade model. Similarly for the bearish idea. You need to know if price is running for liquidity higher or running for liquidity lower. Once you know that, then on the lower time frame, there are specific areas of when to hunt for setups and where to hunt for setups. I'm going to be diving into that, and I'm going to show you how to frame a higher time frame bias. The second thing here is that you do not need a daily or weekly chart for higher time frame bias. As it says in this tweet, treat the 4-hour or 60-minute as your daily chart, and it opens up a whole new world of opportunity. Newsflash, you can go even lower than a 60-minute for your higher time frame bias. The biggest mistake that ICT traders make is that if they can't frame a 4-hour bias, they just go, okay, let me just go onto a 5-minute and hunt for setups. But really what you should be doing is, okay, where is price drawing towards on the 1 hour? Where is price drawing towards on the 5 to 15 minute? Then once you have that, looking for a 1-minute setup at specific areas at specific times. So let's dive into how to frame a higher time frame bias, and I'll be using the 60-minute here because you do not need a daily chart. If you're looking for a 1 to 4 hour setup, sure, you could use a daily chart. But for intraday trading, if you're looking for a 1-minute setup, it doesn't really matter the direction of the daily candle. Sure, if you're trying to trade a 15-minute time frame setup, that might be important. But for small intraday setups, the direction of that daily candle is not going to guarantee that your 1-minute setup works out. So I'm going to walk you guys through the step-by-step process that I go about every single day to find these setups, which I do post to my Discord members beforehand. What I look for is I look for liquidity to be purged. So once a level of liquidity gets taken out, so there's sell-side liquidity beneath old lows, there's buy-side liquidity above old highs. You can go to the 2022 ICT mentorship if you want to know more about that, or the ICT playlist on my YouTube channel. When price runs out a level of liquidity, how does price react under that level of sell side? So this is an old low that I have marked out here. Notice this big wick on Friday, January 5th. Price wicks down and expands up and creates this bullish fair value gap. So number one, what liquidity was recently ran? Well, we have the sell stops, which is beneath this previous low. Number two, where did a change in the state of delivery occur? And what is a change in the state of delivery? See these two down close candles? I'm looking for a bullish order block to get created. I'm looking for price to break over a down close candle or series of down close candles. If there's a series of down close candles, I'm marking out the open of where that series of down close candles started. So I'm going to mark out the open of this down close candle because this started the 2 consecutive down close candles. If price can close above that and create this fair value gap right here, that is a bullish change in the state of delivery. So number one, what liquidity was recently ran? Sell stops. Where did a bullish change in the state of delivery occur? We had that right here when price closed above it, creating this fair value gap. What does that mean? It means that price is likely to target buy-side liquidity. So what's the closest buy-side liquidity? We have this high right here. Now on the 60-minute time frame, I know that the likely direction is for price to run these highs. When you have a cluster of highs, it makes it higher probability that price is likely to run those because retail is looking at this as a strong level of resistance here. It's building up more stops above here. Since we have a 1-hour bias now, the key thing now is hunting for 1 to 5-minute setups at a key area, and that key area is going to be liquidity. So for a little example, if price is running to this high, which I'm going to mark out in a second, I want to look for this 1-minute setup at liquidity. So this is what my favorite ICT setup looks like, where price on the 1 hour. Now again, I'm using the 1 hour as the higher time frame bias. What ICT is hinting at here is that you don't need a daily for higher time frame bias. You can go down to a 40 to 60 minute. Sometimes ICT is just utilizing the 15-minute for his higher time frame bias. So you do not need a daily or weekly time frame. In fact, if you're looking for 1 minute setups, a 15 minute to 1 hour bias is going to be more important than where the daily time frame is going. On the hourly, let's say price is running up to here, I want to look for a bullish change in the state of delivery at a key area. So now I have the 1 hour bias since price took out an old low, just like we have over here. I'm just marking out this example. Price took out liquidity, created a bullish change in the state of delivery. Now, since I have the 1 hour bias that price is heading up to here, this buy side, I'm going to wait for, on a 1 to 5 minute chart, I'm going to wait for price to return beneath an old low. So we have this old low right over here. Beneath old lows is sell side liquidity. This is where turtle soups are going to form. If you ever see me trade on my Twitter, I post executions. Study how I'm taking a bullish turtle soup when I already have a bias that price is going to go higher at sell side liquidity. So this is the key area to be looking for the setup, beneath an old low. Once it does that and it runs that old low, since we have price already heading up to here, I'm going to go on the lower time frame and I'm going to look for a bullish order block to form. I want to see price close above that, and I want to see a bullish fair value gap created. Once that occurs, I can get in here. I could take a long position off of that order block. I can trail my stop pretty tight because I can, instead of having it all the way at this low, I can now trail it all the way up to the low of the bullish order block. And for a low hanging fruit target, I could target this high, or I could target where the bias is. So it's about a over 2R trade to this recent swing high, over 3R to the 1 hour bias target. If you want to level up your ICT trading, I have a premium Discord where I call the market real time and show exactly where price is going every single day. I typically have around a 70 to 80% win rate. I also have a 7-video course teaching everything you need to know about ICT concepts from beginner to advanced. My premium Discord is $30 a month, which is $1 a day. There are hundreds of members in there getting their eyes opened every single day and learning how to really read price action with the help of my 3+ years of experience. So if you guys are interested in that, there is a 3-day free trial link down below. So we already have the 1 hour bias that price is going to head up to here. Now we're going to study 5-minute price action. And when am I going to do it? I'm going to do it between the 8:30 to 11 a.m. New York kill zone. Or I could do it between 1:30 to 4 p.m. You could also use macros as time confluence. Look at this previous low down here. So it is a pretty small low. It does not matter. The algorithm's still going to key up off of this level right here. So we have a old low in this range higher. So as price is expanding higher, it leaves behind an old low. This is an area to hunt for a setup at. Right over here, this is closing the New York session, so it's getting close to 4 p.m. Over here, this is where New York AM starts over here. So price runs out this level of liquidity. This is our level of sell stops. Remember, on the 1 hour, it's heading up to here. From here, on the 5-minute chart, what happens is price runs that low, and it creates a bullish change in the state delivery. So ideally, if you're trading London, this would have been the perfect setup right here, where price closes back above these consecutive down close candles, creates a bullish fair value gap. This starts the change from sell to buy program. Now, you could enter based off the logic that price created a change in the state delivery. This low is going to be protected down here because it closed above the order block. This changes from sell to buy program. So this low is going to be protected. You could enter on a retrace back down into a fair value gap. Stop is going to be safe beneath this previous low. And where are we going to target? We could target this liquidity right here. But where is it likely to head up to? It's likely to key up off of that level and head for the higher time frame bias target. So you could enter based on the logic that the 1 hour time frame is heading up to here. Now, that's a 1 to 4 hour trade based off a pretty good entry. What if you started watching this in New York? Well, up here, it doesn't look as good. But there's still ways to enter into this. So price created a run on sell side liquidity, change in the state delivery. So we're looking for the setup at a key area, which is sell stops. What happens if you're looking at it when price is all the way up here? Well, I'm still using the logic that price is heading up to this high over here. So I could literally look on a 5-minute chart. And as price, since it already created the change in the state delivery here, this is likely to put in a low and start targeting these highs. Now, along this entire way up, I'm just looking for the exact same model here. Run on sell side liquidity. Took out the sell stops. Created a bullish change in the state delivery right here. You have an enter you have an entry in New York session now because price took out an old low, created a bullish change in the state delivery, and it also created a bullish fair value gap. Notice that I already have a bias of where price is going. So since I know where price is going, now these setups are going to work out. One of the biggest mistakes that a lot of ICT students are making is they're not realizing why their setups aren't playing out. And the reason their setups aren't playing out is because they're offside with the draw and liquidity. Draw and liquidity is number one. Setups come secondary to that. So we have the bias that price is heading higher, creates the run and stops, changing the state delivery. You could enter based on this now. The stop loss should be placed beneath this previous low that ran liquidity, or beneath the order block. That's the safest stop. You could trail it up beneath the fair value gap low. So this is the bullish fair value gap right here. You could trail it up to here. It's not likely to run that level. So you can get in this fair value gap. And where can we target? We could target the 1 hour bias target. That's a high RR trade right there. You could get out at a premium fair value gap up in here. You could get out at this recent high, or you could just literally target this previous high for a 1 to 1.7 hour trade. The highest probability setups occur when price is heading to buy side or it's heading to sell side, and you align yourself with that order flow. You're not just throwing yourself in the mix trading a 50-50 trade model, which is just a pattern. We're not pattern trading when we're trading ICT concepts. That's not what ICT is trying to teach you to do. He's trying to teach you to identify where is price likely to expand. Once you're aligned with that order flow, setups become easier. That's what he's trying to teach you. So it took me a while to learn that. So every mistake that you've made, I've already made before. I've been in this game for a while. So I'm teaching you that from a standpoint of experience. I know what it feels like to be super confused as to why your setup isn't playing out, but I'm telling you the answer is the draw on liquidity. So this was a nice trade setup along the way. What happens once it takes out this target, Dan? How do we know where price is going to draw towards? Look for feedback from the algorithm. Is it expanding over the buy side? Is it reversing? Is it consolidating? If it's consolidating, we don't do anything. Since it's continuing to expand, there's no signs of a reversal, then I'm just going to keep on looking for buy, or I'm going to keep on looking for buy models when price takes out a level of sell side liquidity. So it's continuing to expand higher. I can now go into a lower time frame here. Notice how it's cutting through all of this bearish order flow. If order flow is bearish, these up close candles over here would act as resistance. They don't. Price is cutting through those. When order flow is bearish, up close candles act as resistance. When order flow is bullish, down close candles act as support. That gets all disrupted on this leg higher. So my bias now is that price took out the level of liquidity down here. So it took out sell stops. It's delivering higher. Where am I going to aim for on the 60-minute chart now? I'm going to aim for these highs. And the reason that is because it's delivering from sell side liquidity. It's expanded up. It created a bullish change in the state delivery. It's disrupting bearish order flow. It's breaking through all of this order flow right in here. So we have bearish order flow, bearish PD arrays. Price just cuts through that with speed. I'm going to aim for buy stops now. And when it continues to expand over buy stops, it's the algorithm giving me feedback that the draw on liquidity is higher and price is not ready to reverse yet. So I'm going to aim for here. And then I can hunt for setups at liquidity. So when price takes out this level of liquidity, I could hunt for a setup in here. Price changes from sell to buy program, targets this high. If you look on ES took out that high, created SMT, indicating that NQ did not need to take out this high right here. So if NQ is heading for buy side, but ES takes out that buy side, and then it starts to reverse, that's a good sign to collapse the trade. I'll leave that for a study for you guys. Price returns back lower. Where are we hunting for the setup? Beneath sell side liquidity. We have the 1 hour bias that price is going to head up to here. I can go down to a 15-minute chart now, and I can look for a bullish change in the state delivery. Remember, this is 1 hour sell side liquidity. So I'm just going to say 1 hour sell stops. From those 1 hour sell stops, price creates a bullish change in the state delivery. Remember, it's closing over these consecutive down close candles with what? With a fair value gap. So it needs a small little fair value gap in there, or a big one. It just needs to be within the range of the order block. Once we have that, what does it indicate to me? It indicates it's going to start targeting old highs. So we have this high here, we have this high, and then we also have this high. That's my higher time frame bias. So you can see that this is, I believe this is through London. We did have a setup in here that formed, but I wouldn't have traded this personally just because it's not during New York, but it's continuing to target higher prices. It's expanding over buy side. Remember, this is the ultimate objective on the 1 hour time frame. Where am I going to hunt for setups at? When price returns beneath sell stops, I'm already aiming higher on the 1 hour. So when price returns beneath a level of 5 or 15-minute sell stops, when I'm already anticipating for price to head up to here, this is where the high probability setups form. It's frustrating seeing people just try and preach that all you need is an ICT 2022 model because they're misleading people. You need to know where price is going. Once you have that, the setups become easier when you know where to look for them at and when to look for them. I stick to the New York AM session and the New York PM session. If you know what you're doing, you could find these setups all day long. But just looking for it one time a day because it repeats every single day, every day of the week. If you just look for one setup a day and master finding where is price going? Is it expanding for buy stops? Is it expanding for sell stops? Okay, it's expanding for buy stops. Cool. Now let me hunt for a setup beneath sell side liquidity. Okay, we have it beneath the sell stops here. What am I going to do now? I'm going to go down to a lower time frame. What time frame? Could be a 1 to 5 minute time frame. And I'm going to look for a bullish change in the state of delivery. Notice how we have consecutive down close candles here. Price doesn't break above them. Since it doesn't break above them, there's no bullish change in the state of delivery. Remember, this blue line is the 15-minute sell stops. Once it creates that change in the state of delivery, which it does right here, price closes over these two down close candles with a bullish fair value gap. That's what's going to move price from sell to buy program, and it's going to start targeting these old highs. So now I can get in here, stop loss at the low, and I could target the buy stops, or I could hold all the way for this high up here, which seems crazy. But once you see this thing repeat every single day, you start to intimately understand the model and how it performs, and you'll start to trust that you could hold it for these high RR trades. I'm not saying you should do that. I think you should just aim for a easy low-hanging fruit target, just base hit, something that you can repeat every day, and just study it. Just collect data. Realize that the only way to get confidence in this model is through repetition and constantly seeing it every single day. And once you do, you'll start to know when and where to look for it at. So that's going to be it for this video. Key lessons here: you do not need a daily or weekly chart for your higher time frame bias. You could use a 1 hour as your higher time frame bias and study lower time frame structure. Number 2, you need a higher time frame bias. If you don't know where price is going, it's just a 50-50 gamble. You're just pattern trading. So those are two things. If I had to go back and tell myself something when I started trading ICT concepts, I would drill this into my mind like I'm trying to do with you guys. That's going to be it for this video. If you guys enjoyed, make sure to share this. Also like and subscribe, and I'll see you guys in the next one.